Welcome back, ladies and gentlemen. My name is Joshua Castillo. If you don't know me, I am a value investor here on YouTube trying to build the channel. Thank you all for the 151 subscribers. Thank you for everyone that has subscribed to the channel. I hope you get to enjoy this. I'm going to continue to come out with some more content. Now, where have I been? What has happened over the last couple of months since you have probably haven't seen my face since pretty much mid to end of May? So what happened is mid to end of May, I had a lot of papers to write because I'm still doing my master's and working at the same time. And as well as in the beginning of June, I actually got engaged and we've been traveling and things like that. And kind of, between finals, getting engaged and traveling, I've just been busy all of June and then into July, traveling a little bit more. And then I actually got sick over the last couple of weeks. So this has just been like a crazy amount of time, but I just want to make sure that I come out with these videos, and the way that I'm going to start off kind of getting back into the flow of things is by going over the portfolio. Where are we at with the portfolio? What do I think I need to do? What do I think I need to improve upon? What do I think I'm doing well for the year? And kind of things like that. So with that being said, if that's something you're interested in, if you're interested in value investing, make sure to subscribe and let's dive right into this. So for me, the end of the month is July 28th, 2023. That's kind of just tomorrow's the 31st, today's the 30th when I'm recording this, but for the most part, I'm not going to go back and record the 31st. So 28th is going to be the end of July for us here on the channel. So let's dive right into it. So here's a portfolio. Here's where we're at as far as returns, everything in that's kind of in that. You can see on the top line up a total portfolio return. So this is just in general from money I've put in to what we're at right now is 15%. So $3,400 is what we're up. We were down $4,000, $5,000. I forget what the number actually ended up being, over half a year ago. So I'm excited to see that we're back up. We're trending in the right direction, and kind of just different things here. Now, there's still some stuff I need to update on this / things that I would like to do better. But as far as the positioning and stuff like that, I like to show where I'm at with my cash, what the percentage of the pie each position makes up, and then kind of from there you can get your own deductions and whatever. So again, I'm really excited though because I really like where this company is at, or where the portfolio is at, and then the companies that were in here, the businesses that we're a part of, I like the businesses and the way they're running as well. So this is the last month. Again, you can kind of see just from the last time around that we did this, March 28th, 2023 is when we did this. So we were up 1% on the portfolio total return. And now you can see we're up 15%. So again, really excited. I like where we're at. I like the positioning. I like what we're doing. It's just, I wish that cash position wasn't as heavy as it is. It's going down. We're at 46%. Now we're at 41%. So it's going down. It's just a matter of finding a place for that cash and finding things to do with that cash is where we're at in this kind of process. The Fidelity portfolio, again, just so you can kind of see where we're at in Fidelity, cost basis, value, percentage of account, all that good stuff. And plus to the SPACs. So the money market account is the core position for the cash. So again, $10,000. But the thing is that with SPACs, I'm making 4 to 5% annualized return on this each month that we get a dividend from that interest. So we're making some good money on the cash that's just sitting there. It's not sitting there without an interest rate. So I'm excited about that. And I'm also excited about just what's happening. So again, you can see all the things that say E here. That's all the earnings. So we had a couple of earnings this week. We had Meta. We had, I think, Intel. And then I don't think anyone else reported this last week. JPM and some of the other companies reported a couple weeks ago. But this coming week, we're going to have Dropbox. We're going to have Warner Brothers. We're going to have Activision, Corsair, Revolve, Carriage Services. So I'm excited to see what happens. Actually, I don't think Activision reported this next week. I think it already reported. But anyways, just excited to see what's going to happen. Excited to see the positions and things like that and what we can add to if we can. Again, nothing too crazy here. So the year-to-date tax activity, so this is just basically like the year-to-date activity of the portfolio and what we've done. So total realized gain is $558. The net short-term is $956, and that's going to be between the option sales as well as the ordinary dividends. And then the net long-term is going to be $398, which is that position that we sold off in Meta that I had mentioned previously. So as far as performance goes, here's the yearly performance. I don't know why I can't just like put the historical returns for the calendar year, just have 2023 in there, but this is all from Fidelity. So 2021, we were up 18%, negative 28% in 2022. Now for this year to date, we're at 32%. So again, I'm really happy with where we're at. The Nasdaq's returns 37%. We're at 32%. As long as we're above S&P 500, I'm good with where we're at. I honestly, 15 to 20% a year would be fantastic. That's like, if you can keep that going for years, you're going to do some crazy stuff with your money. So if we can get above, 12 to 15%, I'm more than happy. I don't really care so much about being in the 30s, 40, 50, 60%. Transactions, as far as things that haven't happened since March, a lot of it's going to be dividends, interest payments, that kind of stuff. You can see at the bottom, just starting from the bottom because it's chronological order, we had a dividend from Specs, sold some Meta, transferred out some cash for the engagement. We also got another interest payment from SPACs here. JP Morgan bought some Revolve, another interest payment, Intel, dividend payment as well. Bought some Carriage, bought some Revolve, dividend from SPACs, and then we had Carriage Services we had a put that actually expired not too long ago, and then a dividend very recently. It's going to come tomorrow. So nothing crazy. A lot of just deploying cash as well as getting some cash back, which we're very happy about getting cash back. But you can see again, the $10,000 has been around the average position for the cash, and we're getting about $46 on the SPACs position. So you think 46 times 10 is $460. Times 12, it's a 500 something dollars, or close to $500. So we're making some good money on the cash that we have sitting on our portfolio. So I'm not too crazy about needing to deploy cash to find a higher return or anything like that. So looking at some of the positions that we have here on the portfolio, the first things first is Activision Blizzard. So this is one that we opened up as kind of an arbitrage play. We wanted the FTC deal to go through. We wanted this whole merger to go through because it's going through at $95. We were able to buy in, I think the average cost base is around like $77, $76, but we were able to buy in, got some position into this, and then we were waiting for the FTC to greenlight this, and basically everyone else too. So the EU greenlit the deal, the UK denied the deal or rejected it for a couple different reasons, and then very recently Microsoft got the deal greenlit from the FTC, or really from the US courts. FTC tried to strike it down and then got denied, and then tried to appeal it and also got denied. So for the most part, the US part is done. Now we're just waiting in the UK, and with that UK deal came the delay in getting this deal done. It was an agreement from both companies, but basically it got pushed into October. So we'll have to see what happens, but you can see there at the top, the position's about 4%. It's $93 right now. I have an open order at $95 in case the deal goes through. It'll just close the position and pay me the cash that I got for that position. So we're waiting for that one to go through, and then once that one goes through, we'll find a place for the cash, or find another position to fill that kind of spot in the portfolio. But that's been the intention from the beginning, is the arbitrage. Carriage Services is another merger arbitrage possible opportunity. That wasn't intentionally why I bought it, but what happened is the CEO stepped down, is in the process of stepping down basically, and then in last month I think, Park Lawn actually announced a deal to buy out Carriage Services pending due diligence, negotiations, and things like that. Their starting bid basically was $34. At the time before that got announced, the stock was at about $26, $27, $28 maybe. So we were able to buy a couple shares, and then the deal went through, so we don't get to add any more to our position. But had I just bought back when I saw the put and how cheap this company was, had I just bought the amount of dollars that I had that I was putting up for the put, basically, I would have made way more money than just selling the put. So that was my bad. But the thing is that we bought some shares before the deal got announced, so we'll have to see what actually ends up happening if a deal ends up going through. I don't know if $34 is going to be the end, number for them. I doubt it. But I don't think it's going to go that much higher if it does. It might break 40s at the most, but I don't think it's going to go that much higher. Mel originally thought the intrinsic value of the company was around $70, $75, and I think that'd be kind of a stretch to double that negotiated price, but you never know. you really do never know. So we'll have to see. I'll keep track of it. When they announce, they'll probably have some sort of color around this park lawn thing that's happening, but we'll have to see. So I'm excited to see more about that. Revolve is a company that I really enjoy. I really like the company. I really like what they have done with the brand. I like what they've done with their inventory, what the management has done, how they run the company, and just everything about the company in general. Financially is sound. They don't have debt, which is kind of impressive, and they reduced their inventory by a lot over the last quarter. So I'm curious to see what the earnings that come out this week, what that Q2 number looked like, what they came out with, how they did, what their inventory looked like, and all that good stuff. But you can see here, we sold the put, so the strike price is $22.50. We sold the put for basically $4.90. And so we're really into this about $18 a share. So if we end up getting put the shares, if like the stock price stays under $22.50, we'll probably get put the shares in 2024. So we'll have to see what happens, but I'd be more than happy to own the company at that price anyways. So I do have a little bit of shares right now. I'm hoping that the company will stay under that till 2024, so I can just get put the shares and I can, have $2,200 worth of shares on my portfolio rather than needing to worry about anything else. But I really like the company. I'm curious to see what their quarter does. We'll have to see what the stock price does in, kind of response to that. But again, they have a really good management team. Their inventory management has been a lot better over the last quarters, like couple quarters, and we'll have to see what their performance is for the quarter to see whether or not we can add a little bit more to this position. Warner Brothers Discovery is another position that I have owned since pretty much the Discovery days. So they have a large content library. They have a messy balance sheet. They still have a messy balance sheet. They never have not had a messy balance sheet. But the thing is, they're trying to fix it. They're trying to lower that leverage that they have currently. So it'll be interesting to see what comes out of this quarter, because a lot of the talk, I'm guessing, is going to be around the writer's strike and what has happened with the Actors Guild as well. So I'm curious to see what comes out of that and what kind of things that they're talking about. Again, you need to compromise at some point. Warner Brothers needs to pay their writers to be able to continue writing shows and pay for shows, because they can't delay movies and TV shows. I'm sure they have backlog, but at a certain point, you only have so much backlog before you need to continue coming out. And the thing is, Warner Brothers, again, is coming out with like blockbuster movies. It's not like they're these tiny streaming at home shows or whatever, documentaries. It's like they're actually putting a lot of money into this, because they have HBO, TLC, Discovery, Home Media Network, and things like that. So we'll have to see what actually comes out of the whole writer's strike and movies and things like that kind of get impacted by that. But I wouldn't be surprised if David Zaslav at some point is just like, we have to compromise and pay these people what they're asking for, or just kind of find a middle ground on the negotiations. So, and again, this is not the only media company impacted by this. There's a lot of other media companies that you see in the news. So any single media company's news is going to impact Warner Brothers Discovery, and any Warner Brothers Discovery news is going to impact the other media's news. So we'll have to see what ends up happening, but I'm curious to see how this plays out over the long term, which is why I'm holding it currently. Meta Platforms is going to be the last company that we're going to talk about here today. I'm going to put out a full video, reviewing the earnings, what I think about it. But I'm pretty sure come tomorrow, so when you see this video, it's going to be Monday. But come Monday, I'm probably going to cut this position some more. I don't know if the current valuation is justified completely. I think that this company will continue to grow, but how much more, valuation can get pushed into this? Because the PE, I think, is above 30, at least the last 12 months PE is about 30. But even if, let's say, you have a good earnings this next earnings quarter, it pushes it down to maybe 2025. So I don't know. That's the thing, is I don't know. So I'm probably going to cut the position a little bit, and you won't see it until the next couple of videos from now when I actually come out with an update for this. But I'm going to be putting on an earnings review. I really like the quarter. I like the year of efficiency. I like what they've done. I like what the changes that they've made. I just think that the AI kind of run right now that everyone's going on is pushing up Meta a lot more. So leveraging the balance sheet was the other thing that I kind of saw that was interesting. They actually added another round of bonds, or they sold another round of bonds. So they had $9 billion back from 2022, and now they added another $9 billion this last quarter. So again, we'll have to see what they do with that money, but they didn't repurchase a lot of shares. I'm guessing a lot of money is going to cover Reality Labs. So I'm curious to see. Reels is running at a 10 billion run rate right now, and they said that they'll get net. I think they said net neutral or net positive, basically, at the end of this year. So that's a good tailwind for the company, as well as kind of the foreign exchange currency is going to be a tailwind going into the next couple of quarters. So that'll be interesting. They're eyeing double-digit revenue, basically for this like next quarter, or this last quarter was double-digit revenue, and they're kind of eyeing the same thing for next quarter. So that'll be interesting to see if they're actually able to hit that guidance. They did raise their guidance, as far as the expenses and things like that, though, and they cut their capital expense. So, but I'm going to dive all that stuff in the actual earnings review. So stay tuned for that if that's something you're interested in. But I just wanted to go over the portfolio, some of the things that are happening, some of the news that is actually coming out, and kind of what am I going to do next. So what I'm going to do next is basically continue to research companies. And I think what I'm going to do is kind of start back up that like 5 stocks to buy, 3 stocks to buy kind of series that you see everyone else do. But I'm going to change the name. I'm going to find something that kind of sticks a little bit better. It might be just 3 stocks to research, 3 stocks you should know, or something like that. Because I'm not telling you to buy these companies. I don't care if you buy these companies. I don't care what you do with your money. But for me, it's more like what fits your own portfolio, what fits your own preferences, what fits your own circle of competence. And then can I generate an idea or help you generate an idea for yourself? You have to do all the due diligence yourself. I'm not your financial advisor. I don't advise anyone financially. So for me, it's my portfolio. I'm just showing you what I'm doing, and then you have to see whether or not an idea may fit. And so we'll have to see what kind of ideas or things that we can generate over the next couple of quarters. I just need to get back into kind of the flow of putting out videos and then be able to show you guys what I'm actually looking into. I remember this time last year, I was researching a lot of the semiconductor companies, and they hit a low back in October, and I didn't jump at the chance. So I'm trying not to make that mistake again. And I'm going to research companies and be ready this time, rather than getting kind of like analysis paralysis and not being able to actually make a move because I regret it every single day. But again, I can't do anything about it now. So the best thing I can do is just continue to learn, research companies, and find other opportunities where I can. And then in the future, if something happens and stocks in the semis come down a lot, I'll be able to invest in some. So I'm excited to see what happens. So let me know if you guys have any ideas you want me to explore down in the comments below. Again, I'm a value investor. I like to show you a bit of education, I like to show you a bit of, idea and researching and things like that. So if you have any ideas or you want me to look into anything and talk about it here on the channel, let me know down below. But with that being said, thank you all for joining me. I hope you have a great day and happy investing. Goodbye.